On the program today, Zimbabwe's annual inflation rate slows in December. UK-based Economist Intelligence Unit forecasts Ghana's cedi to depreciate by about 22% next year. Kenya Airways resumes daily flights to New York as demand rises. Hello and welcome to Business Incorporated. I'm Will Ibang. First things first, as usual, let's check in on the markets, starting with Africa, where equities we track on the continent were trading with mostly negative sentiments. Nigeria's NGX was the only gainer, finally crossing the 50K level at intraday, while up 0.26%, while South Africa's JSE was down massively in the red zone by 1.27%. Now we look at, for more insights into trading day activities, we see that EGX, if you look at Egypt's EGX, we see that it was down 0.05%. Kenya closed Wednesday session 0.13% down. Now, for more insights into the trading day activities at the NGX, let's bring in Samson Owulabi, investment research analyst at ARM Securities Limited. Good afternoon, Samson. It's good to have you on the program.
Thanks for having me once again.
Now, the NGX has hit the 50K level. What stocks do you think are making this happen at intraday?
Okay, well, thank you very much. So, well, from what you have seen from the market, you have been seeing increased activity in stocks, especially in the banking tickers, and they have been one of the most active tickers. When we look at tickers like GC Access Corp, and Zenith Bank, and also IECO, and also MTN. We can see that there have been activities around those tickers during the day. However, when we look at the top gainers, we can see that CWG, Lasaco Insurance, MB are the major top gainers for today, while stock tickers like Livestock, Chai PLC are the ones leading the laggards.
So, are you bullish? Are you optimistic about a bullish close today? Do you think investors are going to flip the coin?
Well, I'm still optimistic that we're going to see a bullish close today because we can still see that Santa Rally is still going on, and also we can see portfolio managers and fund managers also they are looking at how to tidy up their books and how to make sure that everything closes on a very good note. So we have been seeing rally, and we can see that investors are still in hunting. So we are still going to see a positive close. I'm positive about that.
Thanks so much, Samson Owulabi. We're going to keep our fingers crossed and wait for the close for today.
Okay, thank you very much.
Now, in the Middle East, mostly negative sentiments seen at intraday. We see the Abu Dhabi index down 0.25%. Dubai is also down 0.45%. Saudi, however, is up 0.13%, while the Qatari's index is down double digits loss by 1.06%. In Europe, Europe right now is breathing a sigh of relief as market prices for natural gas fall below their pre-war levels, and this for the first time since Russia invaded Ukraine. Topped up reserves, a mild winter, and efforts to save energy are all playing into this trend. But consumers are hardly out of the woods at the moment. Stephen Beersley joins me from Berlin to give us more insights and details into why this is happening at the moment. Stephen, how meaningful are falling wholesale gas prices for households and businesses at the moment?
Yeah, that's right. Thursday's price for a month-ahead contract on Europe's largest exchange in Amsterdam, reaching just over 83 euros a megawatt hour. That's down from the price that we saw on February 23rd, the day before Russia invaded Ukraine. And that's, of course, before prices jumped and remained quite high and even spiked in the summer before they've been falling. We have seen this trend of falling prices now for several weeks. That is a good sign. Now, for consumers, they're not going to see relief in the short term, most likely, and that is because many of them are on contracts that are long-term contracts. The same can be said for many businesses. Industries may have their own plans, but in general, this does apply, is that these retail rates are not going to change all of a sudden based on these wholesale rates. New contracts, however, we can say are already starting to look better. I visited one consumer portal and found that prices there were 17 cents a kilowatt hour which is down from 20 to 22 cents a kilowatt hour in October. That's still pretty high when you look at what it has been at the end of 2021, for example, where prices were likely to be 7 cents, around 7 cents a kilowatt hour in the second half of 2021. So in some cases, almost 3 times higher than what we were seeing at that period of low prices. Relief could come by the end of next year for most consumers. That's what the German energy minister has said thus far, again, really basing off that kind of 12-month lag that exists. And in the meantime, many customers and many households, I should say, and businesses will see relief in the form of a kind of gas price ceiling that the government here has put into place. That's only on a certain amount of gas. Once consumers exceed the allotted amount under that ceiling, then they will be paying the full price, which still for many of them could be quite high.
But how sustainable is the trend of falling gas prices?
Yeah, again, this is not a development that happened overnight. That's a good sign. So this is something that we've seen over weeks, that it has been falling, and that bodes well for the weeks ahead. At the same time, it's based on a number of factors that could, in theory, change. One of them is that the temperatures to this point have been relatively warm, and that the forecast for winter has been for a relatively warm winter. There have been cold snaps here. Also, there are fewer major gas purchases taking place right now on the markets. For example, Germany was buying large quantities of gas to try and fill up its reserves several months ago. That was also helping drive up prices. We've seen that households and businesses have tried to reduce their gas use to some extent, their energy use to some extent, and so that has also helped. In addition to that, we're seeing that wind energy is really helping feed more electricity into the grid. That means that less gas needs to be burned for electricity. That helps out as well, and that there's less electricity being exported to neighboring countries. For example, France in recent months has really needed a lot more exports from Germany because of issues with its own nuclear reactors. Now, for the time being, that seems to have been improved. That's still something that could change, of course. There could be still more issues with the reactors. In fact, a tightening of supply is expected again at the early point next year based on maintenance schedules. Also, we could see that wind energy stops producing. We could see that there are colder temperatures ahead. We could see that demand suddenly spikes. So it's hard to say what's going to happen really in the near term. We do know that the shock, or we can expect, I should say, the shock that we saw in summer, in which prices really spiked to more than 340 euros a megawatt hour on the wholesale market. And I just told you prices today about 83 euros. So that gives you some sense of the difference. That spike is probably unlikely to happen in the months ahead. And that's because really that happens. What really precipitated that was Russia suddenly and rapidly decreasing flows through its pipelines into Europe. That was a shock. And then, of course, there was no infrastructure built out, such as LNG terminals, which Germany has been putting into place in recent weeks and expects to continue to build out in the months ahead. So it seems to be that there is a bit of a softer landing now. Prices, however, are still going to be high compared to what they were well before the war. It's worth pointing out, finally, that prices, even before the war, were already higher because of a tight global gas market. Gas is in high demand. That's not going to change. So we're probably not going to go back to the prices of mid-2021 anytime soon, for example.
So what are we going to be expecting from the markets today?
Yeah, we're seeing that major indexes are opening down on the day. That was expected. We saw that tipped with futures, the way that they reacted earlier before the sessions opened. And that's largely because investors have been following what's going on in China. They're growing increasingly worried about the number of COVID illnesses there and what that could mean for the country's recovery. The Chinese economy, of course, has a great bearing on economies around the world, as does the U.S. economy and indicators out of the U.S. Speaking of which, many investors will be waiting today on new weekly first-time jobless claim numbers out of the U.S. There's really a dearth of strong indicators this week between the holiday seasons, but that is one that people will be watching to see sort of what the state of the economy is there. There is expected to be an increase in first-time jobless claims. That would be ultimately a good sign for many investors who are hoping that any slight weakness in the economy, in the U.S. economy, means that the rate of interest rate hikes will slow down, and that will be more helpful to businesses who are always afraid of higher borrowing costs eating into their bottom lines. Again, these are relatively small indicators, and some more job numbers will be awaited on Friday, and we could see markets react to it. But for the most part, this is a quiet period right now.
Thanks, Stephen, for the updates. We do wait for the Fed in the U.S. to see if they will definitely slow the interest rate hikes. And now we turn to other updates from the UK, and we have Juliana right there in London. Good afternoon, Juliana. It's good to have you on the program. Juliana, we're seeing that with the efforts that are being made to save energy costs, major energy providers appear to be contacting customers about making changes to their unit prices from January the 1st next year. I'm just wondering, is this a good time for an increment, any increment at all?
Good afternoon, Will. Well, this is a very complex report that has been published by the BBC on behalf of Ofgem, the energy regulator. Lots of number crunching, which I won't try to do. However, the BBC are asking consumers not to panic because, of course, over the past couple of months, energy prices have skyrocketed. And I think most people in this country expected that once Liz Truss put in place this energy price guarantee of £2,500 a year, that was it. But it does appear as if that is not it. And once you start crunching down and looking at the specifics of the detail, that £2,500 is just an average amount of the year. It is not the specific amount, and it does vary from region to region. I believe there are about 12 different regions up and down the 4 isles of this country, the four islands, 4 nations of this country, and the amount of energy you pay varies from region to region. So yes, there are going to be about 15 of the biggest electricity and gas firms, including Shell, including EDF, and Octopus Energy and Scottish Empower, and they are going to be explaining to their customers from January the 1st just exactly how much their energy prices are going to be. Now, of course, unfortunately, this isn't going to be a lower cost because energy suppliers, they've pretty much been battered over the past 18 months. We've seen a collapse of dozens of energy suppliers, and when they do collapse, there's legislation and law in place, meaning that another big firm has to kind of sweep up all of those other customers. So they've lost a lot of money. So any opportunity that they can to increase payments, even if it is just by a penny or two, which is what we're expecting in this increase, they will do. So yes, hopefully no cause for alarm. A very difficult report, but it does appear as if from 1st of January, we will all be paying a lot more for our energy in this country.
God help us out, Juliana. Right now, it's really a tough time for everyone. We're feeling the pinch everywhere in the world. Energy costs rising, phenomenally, at a very fast rate, and we're hoping that this abates very soon. Now, any updates on the ongoing strikes?
Very few updates, apart from saying that the border strike is still ongoing. That's going to be in place until Saturday. Border workers, about 1,000 of them, are striking again over the same issues that we've been discussing: pay, work, and job conditions. They're wanting a 10% increase. Most people in this country want about a 10% increase. Why 10%? Because that's the level of inflation, way above the 2% benchmark, which has been put in place by the Bank of England. And according to the Chancellor Jeremy Hunt and Andrew Bailey, the governor of the BOV, we're not expecting inflation to come down anytime soon. However, it could have peaked, but it won't be going down as fast as that, which is why we are seeing strikes. We did have a discussion with the TUC Congress boss this morning, and he was basically saying that he is completely disappointed with Rishi Sunak and the rest of the Conservative government for basically shutting doors for Christmas and New Year without negotiating with the public sector. The public sector are asking for this pay rise because, unlike the private sector, who have received some increases in their wages every month, it's been a pay freeze on the public sector. So expect more strikes from rail, from the NHS even, ambulance workers, teachers, binmen, highway workers in the next coming months. But yes, it does continue. The misery of not being able to get to work on time, unfortunately, is here to stay for people watching from the UK.
I shudder just to think about it, Juliana. So are the markets looking up at intraday?
Not looking up, although at intraday, the blue chip index is in a much better condition than it was early morning. I think the investors have picked up the scare that was received on Wall Street, Apple being one of the biggest fallers because of what's happening in China. Yes, they have kind of shifted away from this zero COVID policy, but it still is affecting big tech firms that to rely on production coming out of there in time. So the FTSE All Share at intraday, it's down by 0.14%. The FTSE 100 down by 0.11% to the FTSE 250. That's down by just above 0.25%. In the currencies market, the British pound is currently trading up against the US dollar by 0.07%. So at the moment, one British pound will buy you $1.20. The pound is also trading lower against the euro by 0.15%, and it's trading down against the Japanese yen at intraday by 0.48%. Will.
Thanks so much, Juliana, for always keeping us up to date on what's happening in the UK. We take a dive into melon seeds, popularly called egusi in Nigeria. Melon seeds serve a variety of purposes as they're used for making cosmetics, vegetable oil, and broth. Now, this is making its demand almost price inelastic. To give more insights into this is Alima Adediran, analyst, financial derivatives company. Good afternoon, Alima. It's good to have you on the program.
Good afternoon. Thanks for having me.
Now, Alima, is price inelasticity responsible for the 168% sharp surge we've seen in the price, which jumped from 80,000 naira per 50 kilogram to 215,000 naira per 50 kilogram in 2022. That's 215,000 in 2022 and 80,000 in 2021. And when we compare it to food inflation, which is at 24.13%, would we attribute this spike to price inelasticity?
Firstly, your assertions are right. It is true that the price of melon seed spiked by over 168% in the last year. And it's also true that it is like eightfold of the food inflation, which is 24%. And it is also right that the demand for melon seed is price inelastic, which are some of the factors which could trigger the hike in price. However, it is not limited to those factors because melon seed has various uses and nutritional values, which has widened the awareness and the scope of its uses. And this has driven up the demand for melon seed. So the increase in the demand for melon seed has actually attributed partly to the hike in price of melon seed, because we could see that it is rich in antioxidants, and it is also good for so many nutritional uses. It is used for toppings too in the confectionery sector. So this wide usage has driven up the demand for melon seed. Not only that, we'll see that Africa and Asia, they are the two major regions that cultivate melon seed. But if we take China, for instance, we'll see that the yield per hectare in China is over 2 times of what we have in Nigeria. This is because the quality of our seeds that we cultivate is of low value compared to that of China. And another thing is that they are into mechanized farming, which has improved optimal outputs compared to Nigeria, where the major people that are into the cultivation of melon seed are subsistence farmers. So this has driven down the supply chain of melon seed, and the demand for it has not come down. It has been increasing. So these are one of the things that is causing the spike in the price of melon seed.
Now, we do know that the prices of commodities have been disrupted globally in terms of supply by the Russian-Ukraine war. And we also do know that food prices are beginning to taper, and that's according to the Global Food and Agriculture Organization. Are we to expect a corresponding drop in the price of melon seeds? Are we expecting the prices to normalize since global food prices are also dropping? Can you hear me? Are you there, Halima?
Yes, I'm with you.
I asked, are we expecting food prices, especially for melon seeds, to drop or to normalize since global food prices are beginning to taper? Halima, can you hear me? Okay, that's all we can take from the financial derivatives company. An update on melon seeds at the moment. Moving on to other stories, we see Zimbabwe's annual inflation has slowed to 243.8% in December from 255% in November. And that's according to the Zimbabwe National Statistics Agency. The report further shows month-on-month inflation for the period was 2.4%. That's higher than November's 1.8%. Some analysts believe the increase in month-on-month can be attributed to Christmas spending. Meanwhile, the country's finance minister is targeted to contain monthly inflation below 3% in 2023. UK-based Economist Intelligence Unit, EIU, is predicting a 22% depreciation of the Ghana cedi against the dollar in 2023. According to its Africa Outlook 2023 report, this drop will rank the local currency as the third weakest performing currency on the African continent. The EIU expects the exchange rate weakness to continue into 2023, although at a lesser degree. The Ghana cedi so far in 2022 lost a little over 27% in value. It is presently going for 11.25 to $1 at the forex markets. Now, Kenya Airways has resumed daily flights to New York as it moves to cash in on growing demand for air travel on the route. The carrier had increased the flight frequency on the route to 5 times per week from 3 last year in December, citing high passenger bookings. The higher demand is a positive signal for the tourism sector, for which the U.S. remains the largest overseas source market, accounting for 16% of the over 870,000 visitors into the country last year. Kenya Airways has grappled with fluctuating demand on the U.S. route since the beginning of the COVID-19 pandemic, and this has resulted in the shift in frequency of flights. And that's it on Business Incorporated. Thanks for watching. I'm Willie Bung. Bye for now.